Hey traders, Control the Trade here, and we're taking a look at my Twitter feed here. So you can see this incredible lineup of companies that are reporting next week. So we've been talking a while about how volatility's back and it's going to start getting crazy, even though we've just been on this melt up after melt up. Sure, that could continue. It might continue for a little bit longer, but we're not going to get into the overall market outlook. We're going to look at individual stocks, and there's no shortage of incredible opportunities next week. And the first one that we're going to look at is a popular one that we've looked at recently, which is NIO, ticker NIO. So let's go to the chart. Now, I purposely have a weekly chart up here first because I found this to be a really strong weekly close. And if you watched in the last video on this, we discussed how important this weekly close would be. And you can see we closed at 41.08, and the previous high was 39.33, and the previous high here was 40.65. So that is very bullish to close above both of the previous week's highs. And we came down kind of to tease the 50-week moving average here, the red line. We're still stuck between the 20 and the 50. So overall, I mean, the pattern, it's still teetering. I've seen a lot of stocks like this that are kind of teetering between ready to break back out and ready to fall apart. I know that's not really helpful, but that's what I'm seeing right now. And one of the things that's telling me that is a candle like this, for example, and we could challenge this candle all the way up here at 50. We have the 20-week moving average, which is 47.64, so that's an area to watch. Now let's go back to the daily, see if we can get a different viewpoint here. And there's our 50-period moving average, which will be resistance unless we have a strong gap open, let's say, Monday, or when they report earnings. If we gap over that, obviously that changes the entire look of this chart. But right now, 42.96 is where I would take a short, somewhere around there, 43 if I were doing a day trade. High of this candle here is 41.29. I like to look at previous breakup and breakdown candles, and this is one that stands out to me. 41.29 would be another area of resistance. However, we did have a strong close on Friday, so I don't put too much stock into that one. Let's look at a 4-hour chart also. I like the 4-hour chart more for day trading, and of course the 10-minute chart. So the high here is 42.06, so I would again take probably a short trade around there. Again, it's in the moment though. We have to wait until we see how things open, because it could open right above those levels, and that changes the entire trade. Then we're talking about completely different areas of resistance. Back to the daily chart. Let's take more of a 10,000 foot view. We came out all the way from over here at 25.46. One thing I'm still looking for that I've mentioned previously is to revisit the breakout area here, which will be in the mid-20s. But right now it's not looking like that. Right now it's looking like we're trying to break out above the 50-period moving average here. So again, that's why we really seem to be teetering in the middle here. You can see the high was almost $67. Chart was looking really nice and really healthy, and we've had a strong pullback down to the 200-period moving average. We're kind of dancing on top of the 200-period. Recently got back over the 20-period moving average, the blue line. So it's looking a little better than it was. Right here, if we look back here, it really looked like it was starting to fall apart, and I'd say NIO got kind of saved right here. It's not out of the woods yet though. Let's take a look even further back. Really see where we came from. People forget this thing was in the toilet not too long ago, and they get really frustrated about the price on this. Now, there's probably a lot of bag holders that were so relieved when we came out of this terrible downtrend that it was in, and had this monster short squeeze. And once you have a short squeeze, what happens is all of a sudden you start getting a lot of explanations for why it's moving up and how great of a company fill in the blank stock is, and how did we not see this before when it was $2? I mean, fundamentally, again, I don't really look at fundamentals, but like just using common sense, sure, there was probably some news stories out about NIO, but you don't go from $3 to $67 without a short squeeze. There's no real reason that this went up like this. It's not because NIO is some amazing company all of a sudden and they've completely changed, but then all of a sudden you go right back down to $30 and change a share. I think a lot of people get stuck in that mentality and don't realize that the charts lead, not the news. And short squeeze is the catalyst for this, and also FOMO and hype. So don't get too stuck on the stock price on a stock like this, in my opinion. You have to look at the short float. You have to look at the hype that's going on. Are institutions buying this? Things like that. And just remember where we came from. So it's not like that. It's not going to be shocking, at least to me, if we go back down to the 20s or even the teens. It's just not going to be that surprising, even though it's crazy if, let's say, you got into the stock up here in the 30s and 40s, and I'm telling you about the 20s and the teens, you'd probably think I'm nuts, but it's not that crazy considering this unprecedented run that we've had with NIO and stocks like it. So that's my little part that's an opinion. I like try to stick to the charts, let them do the talking. I wanted to give maybe a different perspective than you're hearing out there, because if you're looking at videos on NIO, I'm going to bet there's a lot of confirmation bias on the type of company it is and the prices it should be at. And I'm looking at the charts, I'm looking how it got there, I'm looking where it came from, I'm looking at price mostly. And this gap here still stands out like a sore thumb to me. So don't be surprised if we move down here. Let's say the earnings report is unfavorable to the market, at least the reaction is. The earnings report could be just fine, but it doesn't mean the stock's going to go up. So, I mean, if you've seen that before, it's one of the biggest frustrations for long-term investors, especially when you have a company that you're invested in, they put out a great earnings report and then somehow the stock goes down. And then they'll come out with some bullshit news that tries to explain why it's down. So even sometimes they could report earnings that are less than stellar and it could go up. So it's just a complete coin flip. Just keep that in mind. I've mentioned that in other videos. Earnings are always a coin flip. We have to wait to see how the market reacts, how the chart reacts. I've seen many stocks, they report earnings, they report excellent earnings. The stock will spike up, go up, let's say 10%, and then just give it all back. There's no actual reason for that other than trading that's causing that. It's nothing to do with the news. And vice versa, I've seen things come out with terrible earnings reports, get crushed, recover, and then all of a sudden, all the people that were shorting it scramble, or the algos scramble to panic buy. And next thing you know, something that had terrible earnings is green. I'm sure that's something you can relate to. If it is, please leave something in the comments about when you saw a stock react the opposite way of what common sense would tell you. So back to the chart. Let's look at those important numbers. We have the 20 and the 200 period moving average down here as support. So if we do spike, 9 out of 10 times we will find support down here. We talked about this candle previously, the low of 31.91. So we want to watch that area and below. Now the bull case is getting back above the 50. Gives us a lot of runway, and there's some gaps up here too. So it's not only about filling gaps below, we're also going to try to fill gaps above. So once you get up here, it's going to be magnetic to this area here, this gap here. We're way away from this. Just saying, if we do start to get green again and start to get a lot of push behind this and a squeeze, that'll be an area of interest to watch for resistance. I mean, watching a candle like this at 51.60, 51.85, somewhere in that area would be resistance. Sometimes it's easier to see resistance on a longer time frame. So like the 20 period moving average here on the weekly is 47.64. That's an area to watch. The high of this candle here is 50.42, and the high of this candle here is 54.37. So those are three areas that you would expect to see resistance on a breakout. And here's the monthly chart. You can see the monthly chart does not look as healthy. So it's going to be a very important monthly close for NIO and of course a lot of other stocks right now, the way the market has been running. So that's a quick look at NIO. We're going to know a lot more obviously once earnings come out. It'll be interesting to see what happens after earnings. I think it's going to really determine the direction of NIO, at least for the short term, of where we're going. I think it'll give us a pretty clear direction after earnings. Make sure to check out the other videos on NIO, and please subscribe. And remember, don't let the trade control you.